Good afternoon, everybody, and welcome to TradeStation. My name is Michael Burke. I head up client training here at TradeStation, and welcome to another one of our Learn to Trade series events. And today, we're very lucky to have Jerry D'Ambrosio with us from VectorVest, and he's going to talk about 4 technical analysis indicators to help improve our entries and exits. And we'll get to Jerry in just one second. Keep in mind that the following presentation is for educational purposes only. All of the symbols and trading ideas discussed by the instructor are for demonstration purposes and are not recommendations. Active trading is not suitable for everybody. I pushed some disclosure information into the chat, and you can find additional disclosure information on the TradeStation website. During the presentation, if you have any questions, you can type them in right into the chat here in the bottom left-hand corner of the viewer. If you have any trouble with the presentation, the sound cuts out, or you lose picture, you can always refresh your browser and come back into the presentation at any time. We just put our June Masterclass event on the calendar. This is 3 days of everything TradeStation. It's a deep dive into the platform, and we talk about trading and radar screen and charting, a little bit of strategy trading, a little bit of easy language. So if you really want to take TradeStation to that next level, you should attend Masterclass, and that fills up pretty fast. So if you have a chance to be in San Francisco in June, be sure to check it out. So our presentation today is with Jerry D'Ambrosio. He is the manager of educational content for VectorVest. VectorVest is one of TradeStation's newest partners. They offer an incredible platform on stock selection and technical analysis, but I'll let Jerry talk about that a little bit later. So Jerry, thanks for joining us. It's great to have you here.
Thank you very much, Mike. It's great to be here. I'm going to start things off, guys, with a question. I would like to get a sense of kind of what you guys are going through right now in the market. So what's the biggest frustration or challenge you're facing with trading at the moment? And I'm going to make this really easy for you. Is it when or if you should be buying stocks? Is it what stocks to actually trade? Or is it when to exit trades? Buying is easy. Exiting trades, not only at a gain, right, when you want to take profits off the table, but cutting your losers. The big takeaway, the key takeaway, the main thing I want you to take away from today's webinar is that you need to make sure to use the right tool for the job. And what do I mean by tool? It's the software or website you use to find and manage your trades. Now, it could be your broker's tools or their website, or it could be other research and analysis software that you purchase. So big takeaway, make sure that you're using the right tool for your current objective. Here's what we're going to cover today, okay? Number 1, we're going to learn how to use top technical indicators. What I mean by this is you'll understand what they are, what the indicators are, and how to use them to pinpoint your entries and exits. This will help increase your trading accuracy. So you look to get more winning trades than losing trades. And then next, you're going to learn how to search for trading candidates. You'll learn how to narrow down your list of candidates from sometimes thousands to just a few. And this is going to help reduce the time you spend trading every day. So another quick question, right? Which technical indicators do you use the most? So maybe you don't use any, and you can say that, but do you use the MACD or moving average crossovers? Do you use support and resistance? Do you use the DPO, stands for detrended price oscillator, and or Bollinger Bands? Stochastics, which is my favorite go-to indicator, or you don't use any. There are a lot of technical analysis indicators, and it can feel overwhelming at times. We're going to focus on these, okay? We're going to focus on a few. I included all of these in today's webinar because they cover kind of the different types of markets that we're going to face. We're going to face nice, comfortable, trending markets, right? Higher highs and higher lows. Those are real nice environments to trade in. Then there are going to be times where the markets don't do that, right? They kind of move sideways, they channel, they bounce back and forth between support and resistance, very similar to what we experienced at the beginning of 2018. This year has been fantastic. Not much pullback, right? A little hesitation here and there, but nice uptrending market so far this year. But that doesn't happen. Like I said, 2018 was very difficult. The beginning of 2018 was very difficult. So you guys are in the right place. We're going to cover all these. And the first thing we're going to do is talk about how to use these indicators, how to use top technical indicators to pinpoint entries and exits. Now, a lot of people struggle finding their trades because they just don't know what to look for. You guys said it earlier, you know, finding trades, what stocks to buy. I asked you the question, what's the biggest frustration that you're having right now? And a lot of you are saying, you know, what stocks should I be trading? It's like back when you were in school. Remember trying to use that card catalog, the Dewey Decimal System to find a book? Well, if you didn't know what you were looking for, it's nearly impossible. Instead of not knowing what to look for, you want to look at a stock and have the pattern or patterns just stand out to you very clearly. You might be wondering why there's a bunch of Legos on your screen. Well, I play poker from time to time with a buddy of mine, and he's a big Lego collector. Now, he's a grown man. He collects Legos. I don't judge, but he told me a story once where a neighbor of his asked him over, because he's a big collector, he's an avid collector, he's got tons of sets, and his neighbor wanted him to take a look at this, what seemingly to you and I would look like a pile of junk, right? Just a pile of Legos. And he asked him to look at that set, look at that pile, excuse me, and pick out the pieces that were worth money. Because my buddy knew which pieces belonged to certain sets that were worth more money than others. And when you're studying technical indicators, when you're looking at charts, that's kind of how you want to be. You want to look at that stock and just know immediately what you should be doing with that stock. Should you be trading it or not trading it? If you're in it, should you sell it or should you hold it? Okay. Now, perhaps one of the most popular technical indicators, and you guys said you use the MACD. It stands for Moving Average Convergence Divergence. It's a great indicator to help pinpoint meaningful changes in a stock's price direction. It's a trend indicator. It stands for Moving Average Convergence Divergence. So there's moving averages built into this indicator. So if you guys know anything about moving averages, they're trend-based indicators. It uses a 12 and a 26-day exponential moving average. Now, it's not important to get caught up in the calculation or the formula of the MACD. If you want to Google MACD, you'll get everything you need to know in terms of how it's calculated and the formula for it. What's important is to discuss how to use it. Okay, so let's take a look at an example. Here we see a graph of NRG. I've added MACD to the bottom of the chart. Let me just make sure here you guys can see my mouse. You can now. The most common use is to look for times when the MACD histogram, and that's the yellow bars down at the bottom, crosses above or below this zero line. Okay? That's a great indication that there's a change in the stock's trend. And you can see several examples here on this chart, and you can just plot any stock, look at any stock and plot the indicator and just ask yourself, and this is the kind of the rhetorical question I'm going to ask everybody here. Every time the MACD histogram, that's again the yellow bars here, go from below zero to above zero, did we have an opportunity to make money? Okay, and here with NRG, we're looking at May 18th of 2017. Did we have a chance to make money here? Absolutely. Right? Stock bottomed out, stopped going down, started to go back up, and our signal here with the MACD gave us a bullish entry on May 18th, 2017. So yeah, absolutely. What about here? Okay. Stock gave us a nice opportunity for some gains, eventually started to pull back. I'm going to talk about the bearish signals too. Right now I'm just talking about the bullish signals or the signals that tell us to enter the trade. What about here? Absolutely, right? We had a gap up, real nice gap up, and it was a breakaway gap. Stock continued to rise. Did we have a chance to make money? Absolutely. What about here? So now, what did the stock do for quite some time? Looks like a few months there in the summer into fall of 2017. Kind of moved sideways a little bit, broke down towards the end of the summer of 2017, and turned the corner, established a higher low, and not only that, but the MACD histogram, look at how long it stayed in negative territory. What does that tell you? That tells you don't trade the stock. Okay, that tells you do not buy the stock when the MACD histogram is in negative territory because the trend is down. Remember, it's a trend indicator. So the trend changed. The MACD histogram bars went positive, gave us a nice opportunity there for some gains. I'm just simply moving from left to right. I'm showing you all of these signals here that we've gotten for NRG since that first one in May of 17. How about here? Right? So what's happening here now? The stock is uptrending. Right? Here was a new high. What are we starting to see after this bullish crossover here? We're starting to see higher lows. We got another new high back here in October of 17. Stock retraced, right? Pulled back a little bit, established yet another higher low. So we got a nice uptrending stock that we're trading here. And MACD histogram bars once again go from negative to positive, below zero to above zero. Did we have a nice opportunity for some gains? Absolutely. How about here? Now here, we probably would have walked away either even or with a small loss. Okay, and I'll explain why here in a moment. But not every trade is going to be a winner. You guys know that. But the idea here is if you follow the indicator, and really this is a huge point that I want to make here. Favor stocks that look like this, right? Favor graphs that go from bottom left to upper right. You got a nice uptrending stock. Sure, the stock's going to pull back from time to time, but you want a nice uptrend. And what you're trying to do is you're trying to buy the dips, right? You know, you're waiting for the stock to pull back, stop going down, start to go back up. You're waiting for the indicator to tell you when to enter into the trade. You're probably thinking, well, I've used the MACD before, and you've shown me, I don't know, 5 different setups, and 4 of them were winners. This one might be a loser, and you're saying, well, that doesn't happen for me. One of the reasons it may not happen for you is the types of stocks that you're trading. So stocks that follow my pointer there, you know, stocks that go like that. Looks like an EKG chart, not trending. You know, MACD, because it's a trend-based indicator, isn't very effective in that type of an environment. So you want a nice uptrending stock. You're likely to get more winning trades than losing trades if you favor using the MACD on a nice uptrending stock like this. Mark says, does the MACD work for day trades? Sure, absolutely. 1 minute, 5 minute, 15 minute, etc. Absolutely. It absolutely does. Same concept. Let me tell you though, when you're looking at a 1 minute chart, you're likely to get a lot of whipsaws, right? If you're day trading, you may want to slow things down a little bit, use 5 minute, 10 minute bars, but it works exactly the same and just as effective. All right, so here maybe you walked away with a little even. How about here? February 20th, 2018. Now this was quite a pullback, right? Almost a reversal in terms of a trend. Now we're starting to see lower lows and lower highs here in the short term. Overall, still looks like it's nice in a nice uptrending environment, but eventually it stopped going down, started to go back up. Now, one thing I want to say is here, back here, January of 18, right? We got a pullback, and then what did we see? We saw a nice little rally here, right? So let's take the MACD out of the equation for a second, and you look at that rally, and that might have sucked you in, right? But did the MACD histogram bars ever go positive? No, right? So it's sometimes difficult to gauge when to enter a trade if you're just simply looking at price. Guys, that's what indicators are for, all right? So here we finally got a nice reversal. Not quite, we didn't quite break that downtrend yet, right? We did about a week or so later, but the MACD histogram told us that this was a good time to get in back on February 20th of 18, okay? So let's talk about the bearish signals now. So we know that when the MACD histogram bars go positive, That tells us to enter the trade. Okay? Good time to exit, or considering exiting, would be when the MACD histogram bars go negative. And you can see here on July 5th of 17, that would have been a good time to help you protect profits. Now, I know what you're thinking. You're thinking, well, if I sold there, what happened 5 days later? Right? The stock gapped up, but I missed out on all those gains. Don't do that to yourself. Don't look back and say, I shouldn't have sold it because I missed out on a big opportunity. I'm going to explain why you shouldn't do that to yourself in a moment. But that would have been a good opportunity. Look, take your gains off the table, move on to the next trade. How about here? Same thing, right? I know the stock kind of moved up for a little bit there after the bearish crossover, but remember where you got in. You got in right at that gap up, okay? And rode the stock for a couple of weeks there, took your gains off the table after the stock pulled back, moved up for a little bit, but then broke down for a good month or so, and you can see the histogram bars, remember, stayed in negative territory there for quite some time. Here, another opportunity. This was October 19th of 17. Good time to take your gains off the table there. What about here? Can't get much better than that, really. You're just a few days, maybe, off of the actual high. Another new high, nonetheless, right? So you got another new high. Retracement off of that new high. Pull back off of that new high. Your histogram told you to get out. And boy, that would have been a good opportunity to sit on the sidelines for a little bit. Now, remember, I told you here, I think it was December or November of 17 where we had our entry, and I said this trade might have resulted in a break even or even a small little loss, okay? Because then the histogram bars, it got whipsawed out and exited the trade when the histogram bars went negative. Now, remember back here where I said don't kick yourself for not exiting a trade because of what happened, you know, soon after. Right? Gap up, you missed out on gains, and then you say to yourself in the future, you say, well, I know I got a bearish MACD crossover, and I know what I'm supposed to do, but I got burned not too long ago for doing it, for exiting the trade. I'm not going to do that this time. And then what happens? Right? You turn a small little loser into a much bigger loser, and it kind of blows up your portfolio. Because you didn't follow the signal because of a past experience. Follow the signal. That's what the indicators is for. And here again, nice opportunity to take your gains off the table at a really nice gain. And it's just dead money at that point. You're taking those gains and you're reinvesting it into the next trade. Okay. Another very popular trading technique is to use support and resistance levels. One of the great things about the VectorVest tool, and I'm using the VectorVest tool here, is it automatically has a way to draw the support and resistance lines for you. Okay, you can draw them yourself. You can draw horizontal lines where you feel or where you think support and resistance is. But let's take a look at what I'm talking about. Before we get too deep, what is support and resistance? Basically, a support level is a point where the stock price has stopped going down and begins to go back up. And it does that typically on multiple occasions. It's where demand for that stock is deemed strong enough to support the stock from falling any further. Okay? Resistance is a point where stock prices have stopped going up and they begin to come back down. Again, typically multiple times. It's where supply is deemed strong enough to resist the price from rising any further. And support and resistance is the ultimate crowd mentality indicator. Think about it this way. You ever bought a stock and you watched it go up, right? But you didn't sell it. Why didn't you sell it? Because you thought it was going to continue to go up. Then what happens? It comes down. Right? Starts to pull back, and what do you say to yourself? Well, you say, well, if it ever gets back up there again, I'm going to sell it, right? Then what happens? It reaches that level again. All the people that bought it back here the first time and didn't sell it the first time, now they sell it. What does that do? That puts downward pressure on the stock's price, and it will typically begin to fall. Okay? So how do you use support and resistance in your trading? Number one, let's talk about the buying opportunities. Okay? If you have a pen and a piece of paper, maybe you want to write this down. Create two columns, a buying column and a selling column, or a bullish column and a bearish column. So we're going to talk about the bullish opportunities or buying opportunities here first. So number one, in your buying or bullish column, if you see price hitting support and bouncing off of it, hitting support, hitting a level, hitting a level at which the stock price stopped going down before and began to go back up. So it hits support, it bounces off of support, that's a bullish sign. Typically, it will continue to rise until at least the next resistance level. So if price bounces off of support, that's a buying opportunity. The other buying opportunity is if or when price breaks through resistance to the upside, especially on high volume. So think about it. We already said that there was built-in selling pressure, right, around those resistance levels based on the crowd mentality. If a stock is able to overcome that selling pressure and bust through that resistance level, that's very bullish, and that would indicate a buying opportunity. Okay? So again, two situations where you would buy using support and resistance. One, price retracing from support. Number two, price breaking resistance. Second, if you can also use support and resistance to indicate when to consider selling an existing position or to initiate a short position. So in your selling column or your bearish column, number one, if you see price hitting resistance and begins to move back down, that's a bearish sign, and it will typically continue to fall until at least the next support level. So if it's a trade that you're in, it's a stock that you own, if it's a trade that you're in, you should consider exiting that trade, taking your gain off the table, or taking other defensive actions if you see price retracing from resistance. If you don't own the stock, that could indicate a possible shorting opportunity if you're into shorting stocks. Okay? Additionally, and we don't see this on this chart, but if you see price breaking down through support and moving lower, that's another bearish indication. And typically it will continue to fall until it reaches at least the next support level. Okay? In a moment, I'm going to show you how you can automatically find stocks exhibiting these patterns. Another indicator is stochastics. I love this indicator. I use stochastics every day. I'm a big candlestick reversal trader, and I use stochastics along with bullish and bearish candlestick reversal patterns. Okay. As with other oscillators, stochastics helps pinpoint overbought or oversold conditions. Now, don't let all the squiggly lines confuse you. It's not confusing. Again, if you want to Google stochastics to find the calculation, you can do that. Let's just take a look, closer look at an example here. On the lower end of the stochastics oscillator is 20. And stochastics oscillates between 0 and 100. Below 20 is considered oversold. Above 80 is considered overbought. I'm only going to talk to you guys about the buying opportunities, the oversold opportunities here today. Now, would you agree that when the stochastics oscillator was below 20, that the stock was somewhere near a bottom? Now, I'm not saying it was at the exact bottom every time, but it was somewhere near a bottom, right? So if I look here, end of 2016, was it somewhere near a bottom? Sure. How about here, April of 17, August of 17, September, October of 17? Okay. Good question. Jim says, are you using fast or slow? Using slow stochastics. If you guys want to know the difference between fast and slow, just plot it on a chart, change the indicator from fast to slow, you'll see the difference and how much more effective I think the slow stochastics is. Fast is just, it's a lot of noise. I like using a slow indicator. Okay? So let's talk about buying opportunities. Just because stochastics goes below 20 doesn't mean that you run out and buy the stock. The reason for that is because the stock can continue to move lower. Right? Look back here, December of 16. Stochastics went below 20, but the stock continued to move much lower there after. So what you want to wait for is the stochastics oscillator cross from below 20 to above 20. The stochastics oscillator going below 20, it's really considered a setup, meaning you're getting ready to enter the trade. The actual trigger is when the stochastics oscillator goes from below 20 to above 20. Really nice opportunity there. This is Humana. Stock broke down quite a bit. I don't know if that's a full-blown correction, but it pulled back quite a bit, stopped going down, bottomed out here. Stochastics went from below 20 to above 20. Good opportunity to enter. Moving from left to right, I'm going to show you all of our signals here. How about here? Another strong pullback here back in July, August of 17. Okay, got a nice gap up. Stochastics went from below 20 to above 20. Nice gap up. That was the end of the downturn, beginning of the new upturn. There is your entry. Really nice opportunity for some gains there. Here's end of September of 17. Excuse me. Okay, here let's see. Stock fell. Again, pulled back quite a bit from yet another new high. Stochastics went from below 20 to above 20. So now you can even combine what you've learned so far. Okay. Whoops. Sorry. So let me walk you guys through this as if I took the trade on September 28th of 17. So I take the trade, stochastics goes from below 20 to above 20, and the stock goes up for a few days after that. All right, so I'm thinking, okay, not bad. I got a nice trade on my hands, and then what happens? It gaps down, continues to move a little lower, and it looks like I'm a little underwater now. You see this, where it pulled back? I'm a little underwater here. So what did we learn before about support? Right? What do we do if it's a trade that you're in and price breaks down through support? What do? We consider exiting the trade, right? So that's what I'm thinking. Right, Derek says sell. Barto says buy more. Not quite. You could buy more if it retraces from support. If it breaks down through support, that's very bearish. I don't know if you would buy more. But so what am I thinking here? I'm thinking the stock gap down, it starts to move lower. Where is it approaching? It's approaching support, right? It's approaching the same level that it stopped going down back here right before I bought it. So I'm thinking, okay, well, I'm going to have to cut my losses at some point if it breaks down through support. It doesn't. It doesn't. So you want to be ready to pull the trigger if it breaks down through support, but just because it nears support or maybe even settles into support doesn't necessarily mean that you run out and exit the trade. What happens? It retraces, right? It retraces from support, and now I'm in the clear. Okay? Where does it stop? Right? Where does it stop? This is let me see if I do this. Nope. Where does it stop? It stops at the same level that it stopped back here. So we're looking at a potential double top here, or a hesitation at the most recent swing high. What is the stock establishing now? It's establishing resistance, right? So Mark says, what was the target price to sell at? May have sold it before it dropped all the way down. My target price, and that's a good question, is the most recent swing high. That's kind of my initial target. So new high, pulls back, I enter. The most recent swing high is my target, my initial target. I may take half the trade off the table, let the other rest run. In this case, what happened? You got a retracement off of support. It reached my target. It reached the most recent swing high. Okay, and then what did it do? It settled in there for a while, and then it eventually retraced from it. What did we learn about what to consider doing if you're in a trade and it retraces from resistance? Right? Take defensive action, and when one of those things that you can do is sell the position, sell the trade. Remember where you got in. That's a nice gain. Okay, just moving from left to right. So here was that resistance retracement. Stock falls. Okay, where does it stop? Right? Where does it stop? It stops at support, right? So we got one touch, you got one touch here, you got a second touch right in this support level. It's hard to see the price, right around 240 or so. It stops going down. Stochastics here, we're using stochastics, right? Goes from below 20 to above 20. There's my re-entry. Remember where I exited, right? When it retraced from resistance, I can now re-enter, not only when it retraces from support, which it did on that day, looking at November 24th, 2017, but stochastics also went from below 20 to above 20. Where's my initial target? My initial target's going to be at resistance. Now I no longer have an uptrending stock, right? I have a sideways channeling stock, a stock that is bouncing back and forth between support and resistance. So my initial target is the most recent swing high, which is resistance. Donna says, what settings are you using for slow stochastics? 14.3. 14.3. So what happens? The stock rallies nicely, sharply, a couple of really big up days. Where does it stop? It stops at resistance. It retraces from resistance. I take my gain off the table. Okay? Here's another re-entry now. I sit on the sidelines. I wait, and the stock breaks down enough where stochastics goes below 20, crosses from below 20 to above 20, and there's my entry. Beautiful. That's a home run trade. So here's my initial target. Where's my initial target? It's going to be at resistance again. What happens, right in this area here? It settles into resistance for a day or two. I got a big red candle there, which you could consider as a resistance retracement. So what I said earlier is that's my initial target. Okay, that's my initial target. What you could do, and I said you take defensive actions, you can close half the position, you can let the other rest run, essentially financing the rest of the trade, and then it might settle in there for a day or so and then just break out through resistance. Remember what I said earlier about breaking out through resistance and how bullish that is, right? So you had one touch, you had two touches, you had three touches, and you know what? The sellers gave up. Buyers came in really strong and broke out through resistance. Okay. Here you have another situation. Now we're back to uptrending, right? You got a new high. Stock crashed there for looks like a couple of weeks. Stopped going down, establishing a higher low. Stochastics goes from below 20 to above 20. There's your entry. And just again moving from left to right. Okay. All right. The last indicator or indicators that we're going to look at today actually combines two indicators because it's more of a trading technique. It uses Bollinger Bands and an indicator called the DPO, Detrended Price Oscillator. It's actually a technique introduced to us, to VectorVest, by a woman by the name of Dr. Barbara Starr. She's a trader, she's an author, she's a technical analysis consultant with VectorVest. And she calls this system trading in the fast lane. Again, we're not going to get all tied up in the calculations of these indicators. Let's just focus on how to use them and really what's going on here. Okay? So with this system, it's called the star search technique, named after the creator, Dr. Barbara Starr. What you want to do is you want to take advantage of an increase in volatility and combine that with a signal that an uptrend has formed. Okay? So you simply look for the bands. Now we're looking at two sets of Bollinger Bands here. We're looking at two outer bands, that's the white bands, and two inner bands, the yellow bands. Excuse me. So you simply look for the bands to get squeezed tighter and tighter. You could see that happened here at the end of January, beginning of February of 2017, right? You can see the bands get squeezed tighter and tighter. Bollinger Bands, they are volatility indicators. or a volatility indicator. And when you see the bands get squeezed tighter and tighter and contract, that's just a signal of low volatility. And you can see clearly price moves sideways. The daily ranges are very small. Not a lot of volatility here. So you're looking for impending or a volatility breakout. Okay, and you wait for, first off, the squeeze is important. You wait for the breakout. You wait for the stock's price to cross into that left lane. So it's essentially what the bands do is they create trading lanes. Okay? The left lane, the middle lane, and the right lane. So you wait for the stock to break out above the upper middle band and enter into the left lane. And you also, to confirm that breakout, you look for the detrended price oscillator to cross above zero. Essentially, DPO oscillates above and below zero. Above zero is considered bullish, below zero is considered bearish. So you wait for the DPO to cross above zero. That signals an uptrend. Just like what we looked at the MACD earlier crossing above zero. You could think of it the same way. And you see when this happens, price typically will ride in that left lane for a while, right? You see volatility pick up. Wider and wider ranges, daily ranges. And got a nice breakout here, and you got the stock riding in that left lane. Okay? And we've actually built this technique into an entire trading plan as well. All right, so we now know how to use these indicators. Okay, MACD, you look for the histogram bars to go above and below zero, and you really want to favor, guys, I can't stress this enough, nice uptrending stocks, and do some testing, right? Plot a graph that goes from bottom left to upper right. It's going to pull back, of course, from time to time, but plot the MACD on that chart, and then go through each bullish and bearish crossover and see how it would have worked out. It's essentially a back test, right? You know, then plot another chart that doesn't look like that, right? I mentioned the EKG, right? That goes up and down, bounces back and forth between support and resistance, and plot the MACD on it. You will see that you will not get as many profitable signals. So when you use the MACD, just try to favor those stocks. Now, when you're using stochastics or support and resistance, you know, you can really do some damage and make some nice gains trading support and resistance both up and down on a stock that is channeling and moving sideways. Okay? Next, you need to know how to search for these candidates. You need to be able to narrow down your list of candidates from hundreds or thousands to just a few and not spend hours upon hours doing it. The problem is, even when you know what the indicators are and how to use them, and you do now, it's still up to you to find what stocks to actually trade. Sometimes it feels like trying to find a needle in a haystack. You go through hundreds and hundreds of charts, and it's just so time consuming. But with the right scan, you'll have candidates right at your fingertips. All right? Let me show you how we do it. There are two main ways to find trades. There's doing it what we call the one-by-one method. Okay, that's where you can look at graph after graph after graph and after graph after graph. You can be going through hundreds of charts in a day trying to find, let's say, a stochastics crossover. Right, stochastics going from below 20 to above 20. Then there's using a scan or a search to help narrow down the field of candidates. So we're going to do each one. We're going to do both of these. Okay, so now what I'm going to do is I'm going to show you guys the tool that I use, and this is VectorVest, and a lot of you folks probably look to trade stocks in the S&P 500, right? So I'm going to go into what we call the viewers and I'm going to open up a watch list of S&P 500 stocks. Now, this list of stocks is not sorted alphabetically. Okay, it's not sorted randomly either. It's ranked from best to worst based on our proprietary indicator called VST. VST stands for value, safety, and timing. So the stocks with the best combination, the stocks in the S&P 500 with the best combination of value, safety, and timing is right at the top of the list. And so I'm going to start my research at the very top of the list. Now I want to go through all of these stocks here. I'm not going to go through all of them, but I'm going to go through a number of these charts, and we are together going to look for stocks who today just had a bullish stochastics crossover. Okay? What do I mean by stochastics crossover? Crossing from below 20 to above 20. All right, so I'm going to click on this button at the top here called Graph All, and I'm going to move my chart over. And first stock is AMD. Great looking chart, right? Great stock. I'm just going to zoom in here to the more recent time period. Let's see here. Can everybody see my screen here? Okay. All right, give me 1 second here, folks. I see what's going on. I'm sorry, guys. Give me 1 moment. New technology for me. So, okay, there we go. Can everybody see my screen now? Derek says back up. All right, fantastic. Sorry about that, guys. Looks like you can. Okay, fantastic. All right, so what we're going to look for, and we're looking at the hard right edge. Today is April 4th, and we are going to look at the top stocks here, and let's determine if these would be viable trading candidates for tomorrow. And they're only going to be a viable trading candidate if today the stochastics oscillator went from below 20 to above 20. We can clearly see that it didn't, right? When did it? When did the stochastics oscillator first cross from below 20 to above 20? Looked like it did here back on March 11th. That would have been a really nice entry, right? Well, we missed the boat on this one, right? Stochastics is a little bit overbought. Not to say that the stock can't continue to go up, but what are we looking for? We're looking for stochastics to cross from below 20 to above 20. And that didn't happen today. So we're going to move to the next stock. I'm just going to click over here. SNPS, no way, right? Actually crossed from above 80 to below 80 recently. No, actually, you know what? It didn't even go below 80 yet. It's actually at 81. Mark says, so you use the daily indicator to screen your day trading candidates. No, actually, Mark, I'm not screening for day trades right now. And within VectorVest, you actually can't screen for intraday stochastics crossovers. We're just looking at end-of-day data here. I'm looking at daily end-of-day chart here. These are daily bars. So when I show you what I'm going to do in a minute, when I show you how to screen, I'm not screening for day trades. I'm screening for swing trades. Okay. So what about here? SNPS, clearly no. Okay. Stochastics is not crossing from below 20 to above 20 today. When did it cross? Actually, no, my God, I have to go all the way back here. My goodness. So it's been high for a while, and that's when I say, you know, just because stochastics goes above 80 doesn't mean the stock can't continue to go up. All right. And when did it cross from below 20 to above 20? Back here on December 27th. Okay. Well, look, we're a little late to the party. Hopefully, look, I look for at least a strong enough correction where the stochastics oscillator will go back below 20, and then I'm licking my chops ready to get re-enter the trade. Okay. So I go to the next stock. CDNS, no, right? When did it first cross? Back here, same day, December 27th. I missed the boat. You got some bearish candlesticks here. You got a hanging man. You got some dojis here, representing some indecision. Stochastics is not crossing from from below 20 to above 20. I'll go to the next one. AutoZone, no. Got another doji. Oh yeah, strong doji yesterday. So again, we're asking the question, is stochastics right now going from below 20 to above 20? It's not. How about TDG? No. AVGO? No. When did it first cross from below 20 to above 20? March 11th. Nice entry there. All right. How about here? Nope. All right, so this is the one-by-one method, guys, right? You can see how time-consuming this could be. What is this stock actually doing, right? It's retracing from resistance, right? You got a nice, so let me show you too. I said earlier that the VectorVest charts, it has a way to draw support and resistance lines for you. Now, we can clearly see, let me just draw a horizontal line here. We can clearly see that this is support and this is resistance. You can draw those two lines on the chart. But I can come up here to go to add parameter, go to technical analysis, select support and resistance, scroll down, check the box, look at that. Automatically draws those lines for you. So here, I can right click on this and just delete it, because right here we have support at $80. I can right click on that one and delete that line, and right here we have resistance at 88.47. So the VectorVest tool has a way to automatically draw those support and resistance lines for you. All right. So I can go through a lot of these charts, guys. I'm not going to find many whose stochastics is going from below 20 to above 20. So that's the one-by-one method. You guys can see how time-consuming that is. Now, the other method that I talked about was using a scan. We have a tool within the VectorVest program that does scan for stocks conveniently, right? So if I go to click on the tool called Unisearch, we have a subfolder in here. This is our search directory. We have hundreds of scans. I'm going to open up this folder here called ProTrader. ProTrader is a technical analysis scanning tool. All right. You can scan for moving average crossovers. You can scan for ADX crossovers. Remember, I said you can scan for all four support and resistance situations. Breaking resistance, breaking support, retracing resistance, retracing support. I'm going to select this search right here, little search that I created. I want to look for, we track, by the way, well, first off, we track, in the VectorVest tool, we track almost 8,000 stocks, but I don't want to look at all 8,000 stocks. I only want to look at the S&P 500, okay? And I want to look for all stocks in the S&P 500 that today have had a stochastics crossing from below 20 to above 20. And again, I'm using the 14.3 slow stochastics, has crossed above 20 in the past day, essentially finding the crossover today. So we went through, I don't know how many stocks, and we couldn't find any in the S&P 500. I just clicked on Run Search, and it filtered through the entire 500 stocks in the S&P 500 to only find 6. Now, you could have went through 500 charts and only found 6. That's kind of frustrating. But with the Unisearch tool, it's a much easier, much faster way to go about finding your trades. Okay? So let's chart them. Let's graph them. PSX, Philips, Allergen, Humana, Wells Fargo, Duke Energy, Walmart, all stocks that we're familiar with, right? So let me graph them, and look at that. Let me just zoom in here. Stochastics crossing over, and oh man, look at this, perfect too. What is it also doing? Not only did the stochastics cross from below 20 to above 20 today, what is price doing? What has price done today? It's retraced from a support, right? Let me see. Yeah. There's the support level right here. Look at that nice retracement off of that support level. Okay, and all I did was I just clicked on that support and resistance. Now it was resistance back here. Okay, it was resistance. Well, first it was support. Then the stock broke down through support, which makes it resistance, right? Then we got a retest of that resistance. Falls end of last year, and then got another retest, and then a breakout through it, which makes it support again. Now you're retesting support, another retest of support. So now we're getting another nice support retracement along with stochastics crossing from below 20 to above 20. Could be a nice trade moving forward. How about this one? Let me take off support and resistance. Allergen, okay? Absolutely. Look at stochastics. And if you just want to do a little research, right? So you say, well, what happened the last time stochastics crossed from below 20 to above 20? Did I have a chance to make money? What happened the last time stochastics went from below 20 to above 20? Did I have a chance to make money? So now we're seeing a much different looking price chart here than we did back here in October and November and December of last year. All right, stock is basing and starting to move higher. Humana, nice doji yesterday, right? Yeah, nice doji yesterday, almost like a doji cross, doji harami. Let me zoom in to show you. Yeah, doji harami here. Okay, looks like it's basing as well. Closing off of the session lows over the last couple of weeks. Got a nice big day today. Let me put volume on. Some strong, heavy volume today. All right, but again, the trigger, the key is the fact that stochastics went from below 20 to above 20 today. Wells Fargo. Stochastics has been below 20 here for a little while. Also, looks like we got a little mini support here as well. Mini support here as well. Okay. I could just go through stock after stock. Whoops. Let me go. I'll show you one more here. Here's Duke Energy. Stochastics going from below 20 to above 20. Same thing with Walmart. Okay. And those are the couple of ways, guys. Those are the two ways. Let me come back here. Let me just buzz through, and I'm going to close here. Those are really the main ways that you would go about finding your trades, right? You can do it the one-by-one method. Don't get me wrong. You can do it. I don't know how long it would have taken you to go through 500 charts to find those 6, but you can do it. And then there's a much faster way, to use a scan. And here's my contact information, guys. I know. Let me see. Jose says I can't see the stock. Can you guys see my contact information here on the screen now? I closed out of the VectorVest program. Bartos says yes. Okay, fantastic. Write down my email address, guys. Take down my email address. It's Jerry D, Jerry, D as in David, @VectorVest.com. That's my direct email address. Somebody asked earlier, how can I learn more about this tool? Go to VectorVest.com, www.VectorVest.com. All the information, obviously, on our product is on that website. If you have any questions, please feel free to email me. Bartos, if you have a question, you can ask it now, or you can email me, and I'll be more than happy to respond within 24 hours. All right, guys, I had a great time today. I hope you guys did. Hope you learned a little something. So I'm going to turn things back over to Mike. And again, if you have any questions, guys, feel free to shoot me an email or go to VectorVest.com for more information about VectorVest.
Thanks, Jerry. That's great information. It's a great platform. Thanks, everybody, for joining us. Reach out to Jerry if you have any questions, and we'll see you at another TradeStation event. Keep your eye on our events calendar. There's always something great coming up. Have a great evening, everybody. Thanks for joining us.